Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to another episode of Money Talks Season 5 right here on ITV Gold. The show is brought to you by Science CPS Services, a full-fledged professional accounting firm located in the state of New Jersey, and they've been serving clients all over USA for decades. And Science CPS Services, they believe in doing taxes right. It's not about refund, it's not about paying taxes, but it's about doing taxes right. Whether you're an individual or you are a business owner, from small to large size business owner, Science CPS Services does taxes right, and that's why they have a huge satisfied clientele. And they can also help you out for any tax matter that you have. They can be reached at 908-888-8900 or visit their website sciencecpsservices.com. Book an appointment. Their on-hand, knowledgeable, experienced and trained CPAs will help you for any tax matter. And as I always say, no question is a small question to ask tax guys. And of course, AJ and his team at Science CPS Services always there to help you out. With that note, let me welcome Mr. AJ Kumar of Science CPS Services. He's a CPA, MBA, and CVA. All together with over 25 years of experience, brings a wealth of knowledge, experience, and expertise on various topics besides tax, money also. And that's why the show is Money Talks, where we seek his guidance and his information. AJ, good to have you in the show.
Absolutely, Sanjeev. Thank you. Pleasure to be here.
You're very welcome. And, after discussing those smart assets, for the long-term wealth planning, and after it's been received very well by our viewers, let's move on to the next important thing. Nowadays, there are many opportunities in the businesses, and individuals are taking risk and getting into business. But those businesses are not limited only in the USA, because nowadays the business owners, they are expanding their reach of their businesses globally. It doesn't have to be only one country outside USA. Globally, they are expanding their reach, and once you do that, obviously, US tax, whatever the rules are there, regulations are there, they also come into effect. So in this episode, we're going to talk about global tax compliance explained. There are several topics, very important topics that you really need to know, and nobody could be better than Mr. AJ to explain that. AJ, correct me if I'm wrong, that today's global reach of all the businesses, really increasing.
Absolutely, and not just that. Not the global reach is going to all over, not just in US. We have a lot of people here in US who came from a different country. They had businesses, they had homes, they had bank accounts over there. So when we talk about taxes, it's not just the US taxes. For most people, they have to be concerned about the India taxes. They have to be concerned about the Indian bank accounts, the saving accounts, the NRI, NRO accounts, the assets, the home, the inheritance, their parents, even if they are here, but the parents are still there. How about if the parents wants to give some money to a US citizen? What filing, what compliance, who is supposed to do the filing? So let's understand, how does this whole thing works? You are a global citizen. You are not limited to US. When it comes to your money, when it comes to your taxes, it's not about US taxes only. This episode will try to cover a lot of information: FBAR, FATCA, foreign gifts, 3520, 5471, 5472. There are a lot of compliance that we will be talking about. If you need more information, please check out the episode, go to our website, call us, and we'll be happy to help.
All right. So with that note, today, as you said, AJ, we're going to discuss on global tax compliance explained categories, FBAR, FATCA, and international disclosure requirements simplified. But before that, I'd like to begin with the financial quote that I received from Science CPS Services. The quote is, "Global compliance starts with accurate disclosure and informed financial decisions." So that is very important quote. And with that note, let's start with the very famous, very, very, very reasonable and relevant to almost all of us. It's called FBAR, Foreign Bank Accounting Reporting, right?
Absolutely.
Foreign Bank Account Reporting.
It's more about compliance. It's more about reporting. FBAR does not incur any taxes. If you have $10,000, if you have $100,000 in India, in a foreign country, how much tax do you pay? Zero. It's all about reporting. It's all about remaining compliant. The penalties are absurd. Penalties can be 50% of the maximum amount that you had outside this country per year. So how do you report it? The rule is simple. If you had more than $10,000 in all the bank accounts combined together at any point of time during the previous year, you have the filing obligation. So the filing is due along with the personal tax filing, which is April 15th. So you look at the prior year at any point of time. Add all your accounts. You have one account in PNC, one account in Sindh Bank, one account in IDBI. Add all those accounts, maximum amount at any point of time, and see if the balance crosses $10,000. If it does, you have a filing obligation. If you have the filing obligation, you are supposed to report all the bank accounts, not only the bank accounts where you had more than $10,000. You are supposed to report all your bank accounts. You are also supposed to report the CD, the fixed deposit. You are also supposed to report the mutual funds, the value of the life insurance that you have. If you have any private investments, you are supposed to report all those liquid assets on FBAR as long as the total value at any point of time was more than $10,000. And the filing is due along with your personal tax filing. The filing is called FinCEN 114, FINCEN, FinCEN 114.
FinCEN 114, that is a form that that individual should remember. Now, there is a concern, and people are skeptical out there. Many of them have bank accounts in India or wherever the country that they come from. I don't want to limit only India. But they are afraid that if they disclose the balance that they have, they could have inherited it, or maybe they saved it before coming to USA, whatever the reason may be, AJ. But they are a bit skeptical that if we report that money here in US tax return, we're going to be paying more taxes also. How would you simplify that in an answer for all the viewers?
FBAR is all about reporting. You have $10,000 outside this country, you pay zero taxes. You have $100,000 outside this country, you pay zero taxes. If you have earning, let's say if you have a saving account and you are earning some interest, that needs to be reported on your US side. But you are already paying taxes. There is TDS, tax deducted at source. The tax that you are paying in India gets deducted, gets offset over here on the US side. There is really no double taxes. There is no downside. Now, flip the equation. Look at the downside of not reporting. If you don't report and the system finds out, because all these banks, ICICI, HDFC, all these banks are directly reporting the account information, the owner's information to the US Treasury. If they find out and you don't report, then look at the problem. Then look at the penalties. The penalties can be 50% of the maximum amount that you had in any account per year. You don't want to be losing this money. So do the right thing. The FBAR needs to be reported. There is no taxes. It's a formality. Make sure you report it.
Okay. Now, why does U.S. government wants to have this foreign income reported when there is no tax consequences?
So the rule has always been there. But after the September 11, the rule was enforced only because the government wants to track the fluctuation of money. It's not about how much money you have, it's how the money is changing. Let's say if you have 50,000 US dollars last year, this year you have 51, 52, no concern. But if you had $50,000 last year, this year you have 12,000, next year you have 500,000. We want to know you're not reporting any foreign income. Where is this money coming from? Who is giving this money to you? So it's more about tracking the fluctuation. It's a security concern for the government. That's why it's enforced. That's why penalties are absurd, punitive, only because we are concerned about the country's security, safety here.
Okay. Very well. All right. So with that note, let's move on to the next one. FATCA reporting IRS Form 8938.
Extremely important. A lot of people confuses that they have reported the FBAR and they are done. They are not reporting 8938 or foreign assets. This is called FATCA, FATCA. The form number is 8938. The rule simply says if you had $50,000 at the end of the year or $75,000 at the any point of time during the year per person, meaning married filing joint. If you had $100,000 at the end of the year, or 150 at any point of time during the year, $150,000 outside this country in any form, in shop, home, fixed asset, liquid asset, non-liquid asset, you need to report. That requirement also changes if you are a US citizen or a non-US citizen. This requirement also changes if you are living in US or living outside this country, meaning you could be an expat. If you're an expat, the limits are really, really relaxed, meaning 200,000 at the end of the year, 300,000 at any point of time per person, meaning 400,000 per couple, married filing joint at the end of the year, or 600,000 at any time, meaning if you are living outside this country, we expect you to have asset. So the limits are really, really relaxed. But if you are a US citizen living in US and you have substantial foreign asset, you should consider reporting those assets on Form 8938. Again, like FBAR, there is no taxes. You could be having $1 million of asset and there is no taxes. You could be having 50,000 of asset, zero taxes. It's reporting. And how is it important for you? Why should you consider it, you ask? If you report that you have a property worth $100,000, tomorrow you decide to sell it and you want to bring that money here. We know that you have been having this property. We know you had this asset over there. We are okay for you to bring the money. We are not giving you a hard time.
All legal ways, yes.
But consider the situation, you never told us. You never told the system that you have a property worth $100,000. Now, after selling this property, you want to bring this money. Should we not ask for how did you get this money? How did you get this asset in the first place? Why did you not tell us? So it's all about tracking. FBAR and FATCA are for the interest of country's security, safety. That's why there are extreme penalties around it. Please be careful. Again, if you have no tax liability, why not do the right thing? Why not report it?
Absolutely. Well, that's what Science CPA Services believes in doing it. Do your taxes right. And that's why Science CPA Services is among one of the best CPA accounting firms that individuals look after individuals as well as business owners. With that note, we're going to take a short break. And after this break, we'll come back with the second half of the Money Talks right here on ITV Gold. Welcome back to the second half of the Money Talks Season 5 right here on ITV Gold. In this show, Mr. AJ Kumar of Science CPA Services brings his knowledge, experience, and he shares this with us for our guidance. That's what the Money Talk show is all about. With that note, let's move on to the second half, and there's a lot more interesting information coming our way. Now, this global tax compliance, you may find this a little difficult to understand or complicated. Maybe a little bit, but it's not really that complicated, but it's to your benefit. And before I go any further, before we discuss next topic, I want to let you know that wherever you are confused and you think you have money in the country that you come from, and then whether you inherited or whether you saved it, whatever it is, contact Science CPA Services. And if you get a chance to speak to AJ or one of his on-hand CPAs, they will advise you, guide you in the right direction. But do it what's right, and that's what Science CPA Services believes in it, doing taxes right. So any question you have, do not delay. Give Science CPA Services a call, 908-888-8900. 908-888-8900 or visit sciencecpaservices.com. All right, let's go into the second half. It's going to be a very interesting topic. But before that, AJ, and for the viewers, I'd like to bring in this interesting tax fact as we are discussing this global tax compliance. The tax fact is the IRS receives foreign financial data directly from many international banks under FATCA agreements. And viewers, if you were paying attention in the first half, Mr. AJ Kumar did mention the same line, and that's a fact.
Absolutely. So in the first segment,
yes,
we talked about FBAR, FATCA, where we were talking about foreign bank accounts, foreign assets. In the second segment,
second segment is important. The
Absolutely.
Second segment, now we are talking about business. One of my favorites, yes. We talked about individuals. FBAR and FATCA basically relates to individuals, right?
Right.
So now we are going to talk about reporting foreign corporations, partnerships, and trust. How does that global tax compliance works? That's what AJ is going to explain to us.
Absolutely, Sanjeevji. So just to simplify the whole concept, let's divide the whole idea into two parts. US people owning company in a foreign country, meaning you are a US citizen, green card holder, and now you have business interest in a foreign company. Could be your dad's company, could be your friend's company, could be just investment. Or flip the idea. There are people in India, in other countries, who owns company in US, meaning foreign people owning the US company as opposed to US people owning the foreign company.
Yes.
So there are twofold ideas. So the first step, let's talk about the US people owning the foreign companies. And the filing requirement is 5471 form. It's a form, 5471 reporting requirement. Again, it does not create any tax liability. It's a compliance requirement. The idea is if you own 10% or more in any foreign company, you need to report it via 5471. If you sell the asset, if you sell the interest tomorrow, you will have the legal right to bring this money over here. If you're not reporting it, the system will give you a hard time. Again, the penalties are absurd. The minimum penalty for not reporting for 5471 is $25,000 per incident, meaning if you have interest in 3 companies, they can try to push the case that now you owe 25,000 for each company. So, and again, if it's not costing you anything, if it's not costing you any additional taxes, why would you not report it? The rule is simple. If you own foreign companies more than 10%, please make sure you file Form 5471. You have to the downside, it's cumbersome. You have to report the profit and loss statement and the balance sheet of that foreign company as well. But again, it's a reporting requirement, no tax liability. Now, flip the equation. You have foreign people owning the US company. The beauty here is, Sanjeevji, you don't have to be here in this country to own a business in this country. You don't need a social security number. You don't have to be coming here ever to own a US local business. The country allows you, this is what we call country of opportunity. That's why people are coming here. You can have a US-based business without ever having a foot put in this US country.
AJ, can I ask you a question on
Please.
that one before I forget? Don't you have to be US citizen or at least a green card holder to own a company in the US? And if you are saying it that you can be foreign based and not coming to US, have no business in US, you have no green card citizen, can they still own 100% of that business?
100%.
What, really?
They can own 100% of the business. Kidding aside, the idea is this is the land of opportunity. You can own a US-based business and LLC. There are limitations around it. You have to be careful. Don't do it yourself. Have somebody who knows what they're doing do it for you. So you have C corporation and or LLC that a foreign person can own 100% without ever coming to this country, without a social security number, without any visa. Forget about green card or citizenship. Again, compliance is there. Compliance is multi-fold. You have to have certain forms that you have to file. In our first section, where US person owns the foreign company, minimum 10%, the form we said is 5471. In this case, the form number is 5472. So very, very simple. 5471, US person owns a foreign company at least 10%, 5472, a foreign person owns a US company at least 25%. So in that situation, a lot of people get the L1 visa, Sanjeevji. What they do, they have a company in India, they form a company, a US-based company, which is owned by their Indian company, meaning the ownership belongs to the Indian company. And then they do this intra-company visa called L1 visa. Very, very common in the immigration world.
I've heard of it, yes.
They don't have to be here. The owner doesn't have a social security number. They don't have the green card and or citizenship yet. Make sure when it comes to foreign ownership or foreign people owning the local corporations, you have the 5471 and or 5472 filed properly by somebody who knows what they're doing, who have done it earlier.
Interesting, very interesting. So now, having discussed the reporting foreign corporations, partnerships, and the trust as part of global tax compliance explained, can we talk about importance of timely compliance?
Absolutely. All these compliances are needed. There are certain guidelines, certain deadlines around it. In many cases, you can get an extension by filing the extension for your personal taxes. I do want to remind our viewers about the foreign gifts. A lot of people get the gift. You're buying your home, first time home buyer. Dad is sending $200,000. Good for you. Congratulations. You have a compliance. Again, how much tax do you have to pay? Zero.
Zero.
FBAR, FATCA, 5471, 5472, 3520, all foreign compliance comes at zero taxes. A lot of forms that we talked about does not create any tax liability for you. We are talking about compliance here. Penalties are huge. 3520 or foreign gift filing is needed when you get $100,000 from a related party. Meaning you can't say my dad gave me 100,000, my mom gave me 75. It's a related party transaction. So we'll add all the related parties together. And if the total amount that you received during the whole year, you can't say first I got 20,000 in January, then I got 70,000 in March, and then I got 30,000 in September. We'll add everything that you received from all related parties as gift. And if the amount crosses 100,000, the US person, has the gift tax filing obligation called 3520. For the US system, remember, when we talk about 709 filing, the US gift tax filing, the tax filing obligation, the filing obligation belongs to giftor, not the person who is getting the gift. 3520 is an obligation that the giftee has, that the US person has, because we have no way to track somebody in India, somebody in Pakistan, who is giving the gift. We have no way to enforce the filing obligation over there. So 3520 is a filing requirement for the person who is receiving the gift.
All right, very well, interesting, viewers, and that's what we covered, global tax compliance explained in this episode. AJ gave us a lot of information that we really need to know on FBAR, and then FATCA reporting IRS Form 8938, as well as reporting foreign corporations, partnerships, and a trust. And then he did touch base upon importance of timely compliance, really important for individuals as well as business owners. The information given in this episode, you will definitely find it very, very valuable. Remember, international disclosure requirements are U.S. taxpayers with foreign accounts or investments may face mandatory IRS and FinCEN reporting requirements. Yes, it gets a little difficult to understand, a little complicated, but not to worry. Sai CPA Services is there to help you, to assist you in that matter. Give them a call, 908-888-8900, or visit their website, saicpaservices.com. With that note, we come to the end of this episode. I'd like to thank AJ Kumar for sharing your knowledge and expertise right here in the show for our viewers' benefit. Once again, this is just an informative show. It's for your information only, for your guidance only. Nothing has been endorsed by either Mr. AJ Kumar or myself, the host of the show, Sanjeev Pandya. So this is just for a guidance only. Any question you have, you can send an email, iq@itvgold.com, or call Sai CPA Services, 908-888-8900. All right, until we meet again, same place, same time. Have a tax-free days ahead. So long.
Thank you.